Hello, I'm Jim Sigler with the Federal Deposit Insurance Corporation. Today I'm going to explain how the FDIC markets and sells assets, primarily loans, retained from a failed bank. When an insured depository institution fails, the FDIC is responsible for resolving it. We try to sell as many of the failing bank's assets as possible at the time of failure to another insured depository institution. When we're unable to do so, the FDIC uses other strategies to dispose of these retained assets, such as securitizations, joint venture transactions, and cash loan sales. Cash loan sales are the subject of today's discussion. Let's look at some of the characteristics of a cash loan sale. A cash loan sale may contain one or more pools of loans. We market the loan pools on a competitive basis in the secondary market. Qualified bidders submit sealed bids that are analyzed to determine the highest return to the FDIC. These loans are sold for cash on a servicing release basis. This means the buyer assumes all responsibility for servicing the loans. Once sold, the FDIC has no further obligations to the underlying borrowers or the buyer except as expressly provided in the loan sale agreement. The loans are sold as is, with no representations and warranties. And finally, from start to finish, the sale takes approximately 120 days to complete. The FDIC engages outside advisors to assist with the loan sales. These experts provide a variety of services, from imaging loan files and valuing loans, to hosting a secure website for online due diligence, and finally, assisting with closing the sale. We offer a variety of loan types through cash loan sales. For example, cash sales can include loans secured by commercial or residential real estate, including second lien mortgage loans and home equity lines of credit. They can also include loans to businesses, commonly referred to as commercial and industrial loans, and consumer loans, such as auto loans. The FDIC also sells certain types of specialty assets, such as agricultural loans, credit cards, leases, government-backed loans, or lead participations. The FDIC markets these loan types to potential bidders with specialized experience or qualifications. For instance, bidders for agriculture or ag loans must certify that they have experience with the unique features of these loans, as well as experience servicing them. The same would apply to credit cards, so the FDIC would be looking for bidders who have an established track record in the credit card business. Government guaranteed loans are also included in specialty sales. To purchase these loans, the buyer must be an approved lender or servicer of the respective government agency providing the guarantee. Finally, participated loans in which the FDIC is the lead lender are only marketed and sold to FDIC-insured institutions. Now let's talk about the due diligence process and how to qualify to participate. Due diligence is conducted online through a secure virtual data room hosted by the FDIC's loan sale advisor. Some of the due diligence materials that you might see include loan data spreadsheets, certain borrower information such as financial statements and tax returns, promissory notes, collateral documents, and borrower correspondence. To participate in online due diligence, potential bidders will be required to complete a number of documents, including a confidentiality agreement, a purchaser eligibility certification, and an Office of Foreign Assets Control certification. In addition, potential bidders must be experienced in buying or selling loans in the secondary market and will be required to provide references and other information to support that experience, and it will be verified by the loan sale advisor. Potential bidders must also have a minimum net worth of $1 million and will be required to post a $50,000 security deposit and execute a security deposit agreement. These requirements are in place to ensure the potential bidder is eligible to buy loans from the FDIC, to protect the borrower's sensitive and personally identifiable information, and to confirm the potential bidder's financial ability to close. Now let's talk about the bidding process itself. Once a qualified bidder completes their due diligence, sealed bids are submitted through the loan sale advisor's secure online bidding platform. Before submitting a bid, the following must be provided to the FDIC's loan sale advisor: a bid deposit, typically in the amount of $100,000, an executed bid certification in which bidders certify that they possess the necessary knowledge and experience and are capable of evaluating the merits and economic risks of the investment. The bidders also certify their bid is genuine, submitted in good faith, and that they have not colluded with any other bidder. Finally, The bidder must execute a purchaser eligibility certification, in which bidders certify that they are eligible to purchase loans from the FDIC under the laws, regulations, and policy that govern the sales. Now let's focus on some key dates in a cash loan sale. The sale formally begins when it is publicly announced to the market, and the bidder due diligence period begins, which typically lasts from 2 to 4 weeks. A calculation date is established. This is the as-of date of the loan balances that the bidders are bidding on. This is a significant date since payments received on or before that date belong to the FDIC, and payments received after that date belong to the purchaser. The calculation date is typically 10 to 17 days before the bid deadline, which is another key date. After the bids have been received, analyzed, and approved, then the loan pools are awarded to the winning bidders. The loan sale closing date is typically within 20 business days following the bid award. A servicing transfer is scheduled, and the winning bidder, now buyer, takes possession of the loans and will begin to work with their borrowers. Interested parties can find information about future cash loan sales on the FDIC website, www.fdic.gov. Then click on Resources, Resolutions, Asset Sales, and finally, Loan Sales. There you will also find frequently asked questions and information on historical loan sales. You can also find the FDIC's loan sale advisor's contact information on the FDIC website. Potential bidders can register with these sale advisors to receive email announcements of upcoming loan sales. We hope that's been a helpful explanation. Thank you for your interest in participating in the FDIC's loan sales program.